Happy Tuesday. We are live. 1 o'clock. My Realtor tips. I'm going to wait a couple minutes. See who's online. I'm going to start soon. I have a lot of information I'm going to go over with you guys. Hi, welcome. Somebody came on. We're starting in just a few minutes. We're going to be talking about how much money you're going to need to buy a home. This is a topic that is pretty widely discussed, and I think there's a lot of information that you can find on the internet, but I want to give you guys the facts and some tips when you are saving to buy a home, as well as how much money you can expect to spend. So we're going to start in a few minutes. Everyone's having a good Tuesday. I am just getting over a bit of a cold. My throat is still sore. So if you excuse my voice, but I definitely feel the worst has left. So I'm feeling a lot better. Once I can get this frog out of my throat, I think I'll feel 100%. Yeah. All right. So I'm gonna go ahead and start. It's 102. So I had a couple people that, I just started doing these episodes. This is our 4th episode. And I do this every Tuesday at 1 p.m. live. It's very interactive for anyone that is interested in learning more about real estate, just for their own purpose. Hi, Ellie. Welcome. um, Anyone that may be looking to invest in real estate, okay, or they just need some information for their own personal interests. So I'm doing this, I'll be here every Tuesday. It's very interactive. While I'm going over information, you guys can ask questions. I'll be happy to stop and chime in. And if you guys have questions that would like to get on the next show, send me a private message and then I will make sure and get it on there. Okay? So this episode, we're going to strictly be talking about the finances, the money. How much money do you really, really need? Hi. To purchase a home. What is really, really, really the amount you're gonna need. So I'm gonna jump right into it. Okay. So I want to first start with the myths. Okay. So there are some myths out there, okay, where unfortunately sometimes people they get this information maybe from online or maybe from a friend, and information in terms of the money that you need. And I want to just debunk these myths, okay? So hey Brian, I chose 4 myths, okay? Technically 5, because they're all going together. 5 myths that I want to debunk today. I want to talk about these myths, okay? Um, and then after that, we're going to jump into closing costs. That's also another factor that's involved when you are purchasing a home. We're going to talk about closing costs, and then we're going to end on how to save the funds. Hey Gina, welcome. We're going to talk about home budgeting plan, and then I'm going to refer you to one of my great friends. He actually just opened up his financial company, and he'll be able to put together a savings plan for you guys in order to save to purchase a home. All right, let's jump right into it. So let's talk about the myths, all right? So common myths. Myth is number 1, all right? The myth number 1 is you need to make a down payment of 20%, and that's it. So that's a not 100% myth. You do not need 20% down payment only to buy a house. There are so many different market loan products out there that where you can put down less than 20%. So I'm going to talk about the most popular loan products. There's so many of them out there, but I'm going to talk about pretty much the common ones, okay? So when people are talking about 20% down, they're talking about more than likely a conventional mortgage, okay? A conventional loan, you're putting down 20%, so you are financing 80% of that loan, all right? Now, there are some pros and cons with that. The pros with a with 20% down is obviously your mortgage payment is going to be lower and your loan balance is going to be lower. So that's the pros of it, okay? Um, the other pro is you will not be paying what's called mortgage insurance, okay? Anytime you put down less than 20%, you're going to pay what's called mortgage insurance. And that it's really going to depend on your credit score, a lot of different factors, but it's a couple $100s per month that you're going to be paying. So that's one type of loan. The other loans, you do have conventional loans as well. You have some, I think actually Freddie Mac and Fannie Mae, they have one that's you could put down as little as 3% down, okay? And it's a conventional mortgage. However, you will be paying your mortgage insurance in addition to that. And then finally, you have an FHA mortgage, and that is 3.5% down payments you can put down. So that is a total myth. You do not, hi Janice, you do not need to put down 20%. You could put down less than 20%, but keep in mind, you are going to be paying mortgage insurance, okay? Next myth, number 2, drum roll. Your down payment must come from your savings account. Okay, that is a myth, all right? Your down payment can actually come from a gift from a family member, friend, that's a family, and you didn't hear that from me, but just kidding. So your down payment can actually come from a family member, okay, that is providing you money, okay? It will come directly from their bank account and it will be transferred towards your closing costs, all right? So it doesn't necessarily have to come from your savings account. It could come from other areas of source. That's one, it's a gift. The other area it could come from is your 401k. All right. Many people have 401ks and they've been working many years, and that 401k has built up quite a bit, and they can use their 401k in order to purchase their home. Another thing they can use is any sort of any other investment accounts. You can use that towards purchasing your home. Just make sure you request to pull out those funds prior to way before closing, so that you have enough funds to close on time. All right. And then the third thing are also government grants. So that's actually one of the questions I had Valerie. Hi, Daniel. Welcome. Valerie actually asked me this question, and this was one of our offline questions. And she asked if there were any government grants available for first-time homebuyers. So the way the grants work, each city has their own grant that they allow, per homeowner, okay? It could be 20,000, it could be 30,000, 15,000. They set that amount, okay? So once a year, they approve a certain amount of funds that they will give as grants to homeowners that qualify, okay? Now, most of the time, the homeowners, they are guidelines. I'm going to tell you what the guidelines are for grants. So number one, the first guideline is income. You have to make you cannot make over a certain income based upon your family size, okay? So if your family size is, a certain amount, and then you look at the income and you'll see where you qualify. That's number one. The second is your debt to income ratio. So when you're getting a government grant, your debt to income ratio is very important. Your debt to income ratio cannot be over a certain amount. They're very picky with that. Hi, Denise. They're very picky with that. So just make sure if you guys are interested in a debt to income grant, then I'm not that, sorry, where's my brain? If you're interested in a city grant, just make sure that you're looking at the guidelines to make sure that you actually do qualify for it. Now, if you guys are interested in a grant, let me know and I will research it for the city that you're interested, because each city has a different allowed amount for grant, and also each city has their own debt to income ratio requirement, and each city has their income restrictions as well. And then finally, about these city grants, the these city grants, there are stipulations on getting the grant. Now, most of the stipulations is pretty much you more than likely would have to live in the home for a certain period of time, either 5 years, 10 years, 20 years. You know, they have their own set amount of time that you have to actually live in the home before you so you can order to get that grant. Now, you will get the grant at closing, but let's just say the grant, for an example, the grant, they give you $20,000, okay? But they said you have to live in the home for 15 years. So if you sell your home in 10 years, you're gonna have to just pay the grant back. That's how it works, okay? So keep in mind of that. All right, I hope we're learning, All right, I'm gonna move forward to myth number 3. Down payment assistance programs are only for first-time home buyers. That is a 100% myth. I'm going to tell you why. A first-time home buyer is defined in, according to HUD, is anyone that hasn't purchased a home within 3 years. So if you haven't purchased a home in 3 years, you are considered a first-time home buyer. So in that case, you will qualify for a down payment assistance, okay? Whether it be through a lender or through a city grant, a state grant, whatever grant it may be, you will qualify because you have not owned a house within the last 3 years, okay? Myth number 4. I think some other people came on. Hey, guys. Myth number 4. You need great credit to get down payment assistance. So here's the deal about credit. I want to tell you guys. So the biggest thing with credit, you can buy a home, I'll be honest with you, with like a 520 credit score, but your interest rate is going to be through the roof. Okay, so you want to make sure that you get a good credit score so that you get a low interest rate. A lot of these down payment system programs, they do have credit requirements, but it's not as high as you think it may be. I've seen some as low as 620. Okay, so just keep in mind, you know, you don't need to have excellent credit to get a down payment assistance. Okay. And then lastly, myth number 5. Okay, it says a low down payment means sellers may not accept your offer. That is a big myth. At the end of the day, the seller, when you submit an offer, you're a buyer and you submit an offer, at the end of the day, the seller is looking at their bottom line. They're looking at their net. What are they going to get at the end of the day? And basically, at the end of the day, they want to net a certain amount of cash. So they don't really, sometimes they don't necessarily really care where you're getting your money from. They just care that they're going to get their cash at closing, all right? Now, I would say that you do in this particular market, I don't know about other markets, but in this particular market, you do find that sellers do prefer conventional mortgages better over FHA. And to be honest, it's just bad information that sellers have got, and you know, it really doesn't matter. FHA, conventional, you know, they're all the same. Hey, Margaret, welcome. All right, so that's it on down payment. I hope I answered everyone's questions on down payment. I'm gonna go into closing costs. All right. So when you are purchasing a home, all right, you have costs that are involved. You have your down payment, and then you have your closing costs. So I'm going to talk about your closing costs. So on average, your closing cost is going to be somewhere around between 3 to 5% of the purchase price if you are financing, okay? If you're paying cash, it's going to be somewhere around 1%, okay, of the purchase price. Now, your closing cost is going to be broken up into two areas. You're going to pay part of your closing costs before closing, and then you're going to pay part of it at closing, all right? The closing costs that you're going to probably pay at closing would include your um, well, okay, so each lender is different, so I want to just this is all average numbers, okay? So don't hold me to this. Just kidding. All right, so the closing costs that you're going to pay before closing usually is some sort of credit report if the lender charges you a credit report. Now, not all lenders charge you a credit report, but sometimes you may pay some sort of a credit report fee, all right? The other thing you're going to pay is your inspection. When you buy a home and you are, you know, you definitely want to get the home inspected, you are going to pay a home inspector fee, all right? And that's going to cost anywhere between $300 to $600 depending upon all the reports that you get. You're going to pay that before closing. Then you're also going to pay an appraisal fee. Again, it's going to vary. Some lenders, they charge you before closing. Some of them charge you at closing. That's going to cost you somewhere between $400 to $500 around there, okay? Then the closing costs that you're going to pay at closing are going to be as followed. You're going to pay a closing fee, like a settlement fee from the title company. You're going to pay the lender's fee, and then you'll pay some government taxes fee and title insurance, and maybe some lien insurance. So all that encompasses about 3 to 5% of the purchase price. So that is all your closing costs there. Okay. Now, there is an opportunity where the seller can actually pay for all of your closing costs or part of the closing costs. Now, this is all dependent upon the seller, right? The seller will make that decision if they want to do that. But keep in mind, if you're asking for closing costs, then your offer is not looking as strong as the other offers that are not asking for closing costs. So, but if you're in a situation where you want to buy a house, you have to buy a house, but you need some help, okay? And you need closing costs. So in that case, you would, one strategy that we do sometimes is we would submit the offer a little bit above, at list price or a little bit above list price, and then have the seller give you that money back. That is one strategy. The only thing about that strategy I want to make you aware of is the house has to appraise for the purchase price, right? So if it doesn't appraise, then you have to kind of go back to the drawing board and start all over. So whenever we meet with our buyers, I want to let you guys, this is what we actually give our buyers. It's a home buying guide. It is 14 steps to home ownership. And on the back of it, we have a list, I don't know if you guys could read that, of all the closing costs that itemized as to what you can expect. Now, your lender is also going to give you a list. They're going to give you an estimate of all your fees as well. But we also give you some estimated fees that you can expect when you are getting ready to purchase a house, okay? So I want to open up for questions. I had some comments last week. They said that my realtor tips are too long, so I'm trying to keep this a little bit shorter. So at least under 25 minutes. So I want to open up for questions. Any thoughts, comments? And if you so if you want to know your total amount that you need to buy a home, if you add your closing costs and your down payment together, and then that will be a percentage, and then multiply that by the purchase price. Then that will be your total closing costs. So let me give you some examples here. Let's just say you are purchasing a house for 300,000. Let's do some math here. Okay. And let's just say you are putting down 20%. Okay. And you are also you have closing costs. So let's just do an average. Let's say 4%. And the purchase price is 300,000. Your estimated closing costs and down payment is going to be about $72,000. Let's say the same house, 300,000, but instead of conventional, you're going to do an FHA loan, which is 3.5% down. So let's calculate what that will be. So 3.5% times your closing cost, which is 4%. Your total cost will be 7.5%. So let's see how much is that. So it's about 22,500. So getting an FHA loan, yes, your closing costs are going to be a lot lower versus a conventional is going to be higher. However, the FHA loan, you are going to pay PMI, and that's a couple $100s a month. So that does increase your mortgage payment is higher in terms of an FHA than conventional. Your mortgage payment is going to be lower. So it's one of the things that you just kind of have to decide what's best for you and your family. If you okay with a higher mortgage payment, or you want a lower mortgage payment. That's something you would want to figure out on your own. So, okay, I'm gonna jump into questions, and then I'm going to leave you guys. One of my good friends, he just opened up his financial company called Les Wins Financial, and he is putting together home saving budget sheets for you guys. So if you are interested in getting your home budget prepared, and he can assist you with any other investments you guys are interested in, he'll be happy to prepare that for you. I'm going to type his information in here. I'm also going to let you know his contact information. So it's Les Wiz Financial. The phone number is 877-203-4679, and he specializes in financing, budgeting, investment accounts as well. And he'll be happy to assist you with putting together a plan on how to save for the money that you need to purchase your home. All right. So I'm going to type his information as well. Yeah, these episodes, I want to make it as interactive as possible for you guys, because sometimes questions may come up later. Okay. Sorry about the dead space. Okay, 877-203-4679. Okay. Okay, so I just posted it in there. Contact him if you guys have any questions about preparing a budget sheet. On an average, they do recommend that you save at least 20% per check in order to save towards your home. But he'll be able to get into a little bit more details specifically on budgeting, and he can also refer you to any investment accounts that you may be interested in investing in. All right, so 24 minutes. Woohoo! I kept it actually under 30 minutes. I can't believe it. Sometimes I tend to talk a little much, so I definitely want to keep this short and sweet for you guys. I know sometimes people may be at work right now or at lunch, running back to work. So I want to keep it short and sweet and informative so you guys could, go out your way feeling like you got some good information. So if you guys are interested in buying a home, if you're in a market, I hope that you will contact me. My husband and I, we work together. We own Dominion Realty Group, and we'll be happy to help you guys find the home for you and your family. You can actually search for homes directly on my website. It's www.morehomesflorida. I'll actually type it in there as well. You can search for homes. Now, these homes are homes that are directly from MLS, so they're a little bit more, how do I say it? They're more, I would say, because when you search on Zillow and Realtor.com, sometimes they're a little slower, so MLS is a little faster. So if you search on my website, you'll be able to really see what is the homes that are actually really for sale, or if they're actually already sold or pending. Because you'll find that sometimes Zillow and Realtor.com, they advertise homes that have already been sold. So you have to be very careful with that. So yeah, I will send my website. If you guys are ready now to buy, call me so we can start showing you homes. Or if you're going to be ready in the next couple of months, still call me and we'll sit down and talk about your plan. And we'll also, if you do not have a lender, we'll refer you to one of our excellent lenders. All our lenders that we work with are excellent. And they've all been in the business 20 plus years and do a really great job with all our clients. So if you guys are ready to buy, you can call me. My direct line is 954-800-3370. That's 954-800-3370. If you cannot reach me on the direct line, you can call my office line, which is 833-DRG-HOMES. That's 833-DRG-HOMES. And I'm going to actually type all this information in there. And I'm going to do that now. So my website, morehomesflorida.com. And you can also contact me directly on my cell if you are looking to buy. Also, if you're looking to sell your home, we also help sellers as well. If you want to sell your home and purchase another home, we do assist sellers as well. Okay, guys, I hope this was very informative. I hope you learned something today, and I will see you guys here next Tuesday at 1 p.m. Have a great day. Bye.